evening. My name's Melissa, and I'm back here tonight. And tonight I'm going to do a lesson, and it's titled What Not to Do. Okay? Some days I'm going to do things that work, and some days we're going to talk about things that don't work. You can learn from your own mistakes, and you can also learn about how to be a better trader from other people's mistakes. I did not do the trade that I'm going to talk to you about. Someone else did. But I think it's really important to go over with you because I want you to learn from this person's mistakes. And I'm going to learn from this person's mistakes. And it's a good reminder, okay, of what not to do. So that's what we're going to talk about tonight. The play is FMCN, and it's August 13th. And there's a person, okay, that decided to trade this stock pre-market. Here's the activity this morning, Monday morning. And they took a 6,000 share position of this stock short pre-market. Okay. First of all, what not to do. Do not trade post and pre-market a 6,000 share position with this kind of volume. This is next to nothing volume. There's 4 ticks here that have color. 1, 2, 3, 4. Okay. When you trade post and pre-market, you really have to know what you're doing, okay? You have to get the direction right. You have to know what you're doing. And also, you really need to have volume if you're going to take a 6,000 share. Buys a lot in something pre-market because it's different from intraday trading, okay? You don't have to get filled at any specific price anywhere based on what's going on here, okay? So you're at risk with a big size position without any volume. That's the first thing that happened wrong that we need to learn. So the first lesson, what not to do, is do not take a huge position pre-market or post-market in a stock with no volume. Please don't do that, okay? Even if you think you have the direction right, please do not do that, okay? It's extremely risky. Trading post and pre-market and carrying overnight positions is also risky. And if you don't have a trading plan to do it, I wouldn't do it. Okay, you need a trading plan to do that. You need the experience. It is more risky than intraday trading because of the lack of liquidity. And the day stops at a certain time and opens at another time. Okay, so anything can happen between the time that the market closes and opens the next day. Anything can happen. Okay, when there's not activity. So that's the first thing I want you to learn. It's very important. The next thing is, what happened to this person is they thought that this stock was going to come in. Okay, so let's look at the daily chart. This is what happened. This was Friday. The stock then was gapping up here where it opened. Okay, so it was gapping up here, and this person thought that it was going to be a short. Okay, basically they thought that it was going to come in, but the price that they were shorting it at was in this $24 range. Okay, so let's go back to the daily chart. So it was in this $24 range. Okay, so the person thought it was going to come in. Okay, what happened was it got halted pre-market and did not even open on the day until 9:45. So this person was in this position, 6,000 shares short. And it opened all the way up here at 26. They were down $12,000. Wiped out their account, wiped out the person's account that was funding them. And the broker had to take a hit because it was a proprietary firm that was funding this trader. So the next lesson to be learned here today, what not to do, okay, is don't get in something pre or post market, a huge position, where you don't have enough cash to cover the losses if something moves against you this week in your own account, okay? 3 people were hurt by this. The person that made the trade, the person that funded them, and the broker, okay? Now, what could have happened here, and let's just look at what happened on the day here. What could have happened to save this person and everybody involved, you really need to know what to do here. You need to know how to do this. I do know how to do this. I've never had to do it, but I know how. If you are in a position, he was in this around 24 something, it opened up here at 26, he could have doubled down his position, cost averaged in, the stock ended up closing on the day around 25, he could have ended up getting out with a way smaller loss than he did. He would have had to take more risk to do that if he was certain it was going to happen, or watch the chart and saw this setup then, what actually took place here, which we're going to go over in a minute. But he could have gotten out of this safely. Okay. The broker shut him down because he was down so much money, and that probably was the right decision. But, you know, if you know how to trade yourself out of this, sometimes you can get yourself out of these things if it goes in the right direction by cost averaging down. And how would they have known it was going to happen? Well, they would have had to wait till it opened after the halt. Okay. What happened was they were short the position. Okay, let's look at a bigger chart here. This is a 1 minute chart. So it opened, went up here, did a topping tail. It rallied. They're down the money. When this sell setup happened right here at 9:52, they could have cost averaged down right here. This is an actual setup. Okay, this is an actual setup. Didn't go over the high of the day with this rally, so they could have shorted it right here. Okay. And they could have cost averaged down and got out here. Around 10 o'clock, 10:15. Okay. That would have saved this position. You would have had to know what to do and act fast on this. Okay, but there's a way that person could have got out of this. They would have needed a lot more buying power to do that, because then they would have had to short another 6,000 shares or more than that to get out of it with a little bit of a profit, but that wouldn't have been wise. At this point, you just try to break even or get your losses to half, even to half. Okay, but here was a sell setup right here. Okay, so it could have cost down, averaged down, and gotten out of it. The biggest thing to learn from this is, I want you to look at the daily chart. This was nothing. Okay, there was no play here today. I know the pre-market before the halt happened, it was at this point. Okay, it was nothing. It wasn't anything. Okay, there wasn't enough trading to make a decision pre-market or post-market. I looked at briefing.com where I get data information. I don't think there was any earnings out on this stock. The halt occurred because they received a non-binding proposal letter with a $27 in cash per American depository share, or $5.40 in cash per ordinary share proposed transaction. And so it was halted then at 9:02, and then it reopened. So there was some kind of rumor or buyout or news or something that happened, okay, that reported. But that was after this person was in that position. I looked, I couldn't find anything where there was earnings out on this to create this stock gapping where it was. It probably just had a little bit of a continuation of those couple of bars from this huge big bullish day. A couple people were buying it up here. And then the news came out, and it did really gap up all the way up here. Okay? It got halted before that report came out. It was halted before the report came out. So they found out the report was going to come out. They halted the stock. This happened. Okay? So the next lesson of what not to do is don't trade a stock or don't trade anything where you don't have a strategy. What was the strategy here? What was the strategy here? Before that news or data or halt, I don't see anything here. Okay? The person was shorting it. I don't see the play here at all. Maybe he thought that he was shorting into resistance. That isn't a strategy. You can't short a stock into every resistance. That is not what's going on here. You have to look at the whole chart. Okay. To me, this chart really, with this big gap down that happened here, it tried to rally up here. Now it's just sideways. I mean, this is basically just sideways right now. Okay, the stock really isn't trending anywhere right now. It's sideways. You see that? Okay. This is nothing. Nothing. Where this was at 24 was no play. There are so many stocks to trade on the stock exchange on any given day, of all the days that the trading days are in a year, that are nothing. They're not longs. They're not short. There's no play in them. Okay? I know that as traders, we think that everything's playable on any given day if we can find it, and that's not true. Okay, there is more stock charts that trade every day that aren't tradable. There's nothing to do in them. Okay, there's no momentum play. There's no reason for it. It just does whatever it does because it just feels like it. That's why I love gaps. Okay, because there is a reason that those things work. There's legitimacy in what's going on there. There's power. There's a reason. There's legitimacy. The charts are readable, and they make sense. Okay. I'm not saying that this chart is going to be like this forever. Okay. At some point, this chart may decide to make sense again and create a gap for itself that causes something to happen. Okay. With the stock. We look at the bigger picture here, long term. I would say with this huge gap down that happened here, that the overall trend of this is down. See, it seems to be holding this area right about here, this resistance, okay? But this thing could rally all the way up there until it decides to gap down again. Probably is lower, because this was devastating here, whatever happened here this day, okay? And the trend overall, you can see, is down. But there was nothing to say it was going to be shortable right at this area. Okay. As you see up here, this is actually a bigger area right up here. See that? Okay. So the thing is, I want you to understand, as a day trader, as a trader, there's more charts that are not playable on a day than there are that are playable if you want to make money. And that's why you have to have a strategy. And you have to know what you're looking for, and you have to know what you're doing. Okay? And today is a good example of how you can get hurt if you don't know what you're doing. Do not take any plays or any strategies that you don't know. I wouldn't risk $5.50 in a play or a strategy that I don't know. Okay? There's more risk in doing something that you're not familiar with or has no overall strategy or play than there is in taking a huge position that's something that you know that you've done a million times and you know very well. Sometimes it might not work, okay, but most of the time it does, and that's why it's your strategy, and that's why you play it, because most of the time it works, okay? So when this happened today, people could have shorted this stock. I still would not have, okay, because it was a buyout rumor. Those things are risky. It had gotten halted in the morning. It could have gotten halted again, okay? And this really still is not a strategy. Yes, it gapped up, and I play bearish gaps, but this isn't what I play. This is nothing, okay? This had a huge green bar the day before, gapped up on a buyout rumor. Yeah, worked as a short if you got in at the right place and got out at the right place. But this was nothing. You could have bought it, you could have shorted it, you could have done a million things. It's nothing. And why? Because you see what's happening with the chart here. The stock is trying to figure itself out. Okay, it's my take on it is it's lower, but it's trying to figure itself out here. And now with this buyout thing that happened, you know, it could rally up now. I think they said the number was 27 in the briefing report. Didn't get to that. But tomorrow it might gap up again. Shorting it is not a play. Okay. So the thing is, I want everybody to understand how important it is, okay, to only do strategies that you know well, because you can blow up your account if you do other stuff. And if you take too much size and you're not familiar with the position and you're trading post and pre-market, anything can happen. It's like the wild, wild west, okay? And I just want everyone to learn from the situation that happened today. You know, it wasn't a good situation for anybody involved, and I really want you to hopefully take to heart the things that I said today and really seriously consider the next time you're in a trading room and somebody calls out a trade and you think that it might work and you take it, and it's not your strategy and it's not your play. And I really want you to think again before taking it, because if you don't know it, don't take it, okay? It's important to be able to read a daily chart of something that you're playing. Okay, you can get in and trade stuff on smaller time frames, I know, and get moves out of stocks. But the bigger momentum happens what's going on in the daily chart. And that is the most important thing you need to look at. It's the most important thing you really need to look at. And there wasn't anything going on here. There wasn't any reason to trade this stock at all today. Okay. So I hope that you learned something from this today. I thank you for your time, and we'll talk again soon. Good night.